Okay, thanks, Neil. Thanks, everyone, for joining me today, taking some time out of your day. As Neil said, I'm co-founder, president, and CEO of Indiva Limited. We've been at this for quite a while. The title page to our deck here, it keeps evolving, and it keeps evolving with new products because that's what we do. We're a consumer products company. Cannabis, in my opinion, is really a new part of the consumer packaged goods industry. And you can't say CPG without the word packaging. And so what we do is manufacture, package, and distribute uh, all the products you see here, some of which are yet to come to market, will be coming in the second half, many of which are in the market. And in the case of the edibles, we lead the edibles category. We've led the edibles category for about a year and a half now. And we still lead it despite some new intense competition. So today, what I'm going to do is talk about our position in the industry, talk about the growth that we've experienced. I won't review Q4. There's been a lot about that, but we did have a record quarter and reported record net revenue and record gross profit. And I'll talk a lot about some of the new products that are coming to market as well. So let's just jump right into it. I'll try not to page flip too much. I mean, inevitably, we're going to get through this deck. I know for some of you, a lot of this is old news. And for some of you, maybe you're new to the story. But as I said, we are the edibles leader. We have, in Q4, we had about 40% market share in edibles. That is receded somewhat in Q1, but we expect that to bounce back in the second half of the year with the launch of some of the products you see on here, such as the pearls here from Gruen, and the pips as well, the candy-coated chocolates. Pearls are gummies, by the way. And we've also signed our first vape deal. That was announced 2 weeks ago, just before the Benzinga conference, which I attended, and just right in time for 420. And that deal was done with Dime Industries out of Orange County, California. We're really excited about that. So let me jump into it, and we'll address all these details. Some forward-looking statements here and pictures from our facility that I'll let you review on your own time. Our market cap today is about 35 million. As I mentioned, pardon me, we're 33% market share in for the month of March. So again, that's slightly down from the 40% for Q4. To me, it's not so much are we up this month or down this month. It's do we maintain the leading position, and do we have plans to increase that share? And we absolutely do, not just by introducing some of the products from Gruen, but some of our own innovation that we're working on in-house as well. We sell products in all 13 provinces and territories. We're very proud of the fact that you can buy Indiva products all across Canada, coast to coast to coast. That's important. And we've got a terrific team, pardon me, of experienced CPG executives that work with us every day. This is just a review of the last 3 years of my life and most of the people that I'm lucky to work with here every day at Indiva. So you can see we did report record revenue. Some slight decline in Q4 in our gross margins, mainly from transitory impacts. We would expect margins to increase in the second half of the year because of automation that's coming on, and we'll talk a little bit about that later on. This is, again, a look here at the edible category and the overall market. So we continue to see really strong growth. Overall retail market in Canada is 4.5 billion. Edible category coming in around 300 million annualized. And we're somewhere around 3,000 stores, and our penetration generally is in the 70 to 80% range across most of our products. This here is opportunity. So I want to talk about this slide for a minute. The edible category is only at about 5.5% of the Canadian market. It's obviously outpacing the overall market growth. Otherwise, this line would not be going up and to the right. But that is woefully below where it ought to be. And just to fast forward to the punchline, this is some data from Colorado where edibles in February, so 2 months ago, hit 15.7% of the market. So really the difference between what we have in Colorado and what we have in Canada, there's some slight differences in mix of products, but primarily the difference is potency. And so we're pushing very hard now. I work with the Cannabis Council of Canada. I co-chair the Edibles Caucus. There's a fairly large event happening at the end of May, maybe not ironically, called Grass on the Hill, where we're going to be lobbying very heavily to members of Parliament, basically to help them understand that the public safety issue is not the risk of increasing the potency. The public safety issue is the risk of not increasing the potency. So where is that other 10% going? It's 10% of the overall market. which, by the way, would be somewhere about $500 million retail that is missing, and that is going to the illicit market. And the unintended consequence of restricting the THC limits on edibles to 10 milligrams is that consumers are going back to the illicit market for a higher potency product. And it's very difficult to compete with that. And so as a result, the edible category is only 5%. I would expect, though, that this limit's going to change. This is absolutely on the agenda with Health Canada. They're aware of the impact of that limit, as well intentioned as it might have been to protect novices from taking too many milligrams at once. But it is an anomaly compared to the other categories, and it really does need to change. And I think, looking at how big the category is in a mature market like Colorado, if this law were changed, I think, number one, you would see any kind of child poisonings that are occurring drop dramatically. We've sold 16 million packs of edibles in Canada in the last 2 years. We've never once had a complaint from a parent saying my child ate an edible, ate a Bang chocolate or want a gummy and had to go to the hospital or had a bad reaction, because it doesn't happen. It doesn't look like candy from the outside. The kids can't get into these packages. Most adults can't get into the packages without scissors. And they're resealable. And we designed the packages that way on purpose so that people could consume the product responsibly. So with that, I'll get off my soapbox, but that regulatory change would double or triple our business overnight, given that 90% of our revenue roughly comes from edibles. The other thing I want to point out on the slide before we move on is the vape category is at 23%. In Canada, that is also at 15%, so much lower than it ought to be. And when you take those two categories together, represents about 20% of the Canadian market and closer to 40% of the Colorado market. So this is why we've chosen these two categories primarily as our focus. We're excited to launch the vapes from Dime Industries, but we're really set up for above average growth and continued margin improvement as we grow within these two categories. Just a quick look here. This is OCS data. I apologize for the small font. Tough to fit everything on the page, but I like to be transparent where the data comes from. This is taken directly from an OCS report for the period ended December 31st. And in the quarter, Wana was the number one edible product in stores, and Bang was the number two edible product in stores, despite the fact that Bang is a chocolate. Gummies really dominate the edible category really across North America, but especially so in Canada. So to see Bang in the number two position there is really great. Sales in retail stores are well above 90% of total sales. So while the OCS.ca online data may be interesting anecdotally, it really doesn't move the needle the way sales in stores do. And then looking back at March, overall, I believe we ranked 13th overall nationally against all LPs. And that's not just edibles, that's across all categories. So leading in edibles really does make us a significant player. And this is where now entering the vape category could have a very significant impact on our overall market share and our ranking within Canada. And we expect those numbers to go higher. Another look here at how we rank on a consolidated basis. I believe this is a combination of some sell-side research and headset data. So we're hanging around the top 10, and that's really as a result of our efforts in the edible category. I do talk a lot about the team when we have these presentations. I won't spend as much time today, but everybody on here, I would say the top layer, if not both rows of people that we feature here, have been with the company for 2 or 3 years, or in some cases longer. Our CFO, Jen Welsh, for instance, has been part of the company for over 5 years, was with us when we went public in late 2017. And likewise, Alejandro, our director of sales, has been with us for a very long time. And Rob Kars, our COO, has been with us for over 3 years. Melissa Kurik, our VP Ops, for closer to 4 or 5 years. So, everyone really is bought in. Everyone believes in our mission here to create super high quality cannabis products and really punch above our weight. We've gained the market share that we have from one factory. We've done this on a fraction of the capital that most of the other players have employed. We're well under 100 million of total capital invested. Our asset base is about 40 million, and we did 35 million of gross revenue last year. So I think we stand an opportunity to generate a really strong return on equity and return on invested capital as we push towards earnings here. This is important now. Let's talk about the brands that we own and that we license, because it's a combination, and I would expect going forward that it will continue to be a combination. We believe in licensing successful brands and bringing them to Canada. I suspect at some point that will have diminishing returns because the market will be more fleshed out. Consumers will have more developed preferences. Winners and losers will have been decided by consumers, and makes no mistake, the consumers do decide that. But Indiva is our corporate brand. Artisan Batch is also our brand. We package up terrific craft cannabis from some of the best growers in the country. We just signed a new grower we'll have more to say about, who's based in the GTA. Really excited about their product in terms of hyper-local for the Toronto market. And Bang and Wana were some of our original license agreements. Bang, of course, is award-winning chocolate. Wana is a very popular gummy brand in the United States. Pips and Pearls come from a company called Groon. We did that deal in December. Groon is a Portland, Oregon-based female-founded and run company, and we're really excited to launch the Pearls. Those will hit market in Ontario in July. So the OCS accepted 4 SKUs. We submit several more. I believe it was 2 weeks ago now, we submit to the OCS 42 new SKUs. Now, we don't know how many of those we'll get. Probably somewhere around half would be my guess, maybe a bit more if we're lucky. But that is the highest number of SKUs we've ever submitted in one period of time. So that sets up very well for growth in the second half of the year. In the middle there, you see Dime Industries. That is the vape deal that we just signed. We just presented 6 SKUs to the OCS, including 1 custom battery. Dime is an interesting company. Founded in Orange County, it's a very popular vape product. If you took a flight to LA right now and went to the MedMen on Santa Monica Boulevard, which is a very nice store, you'd see a bunch of Dime products on the shelves, both vape carts, batteries, and disposables. They've got 10 flavors available in 510 thread carts, also in disposables. And what I really like about licensing brands is not necessarily that we think there's a big impact immediately of the brand value recognition in Canada. But what I do like is knowing that the product has survived, or better yet, thrived in the crucible of intense competition that is Southern California, for instance, or Colorado, mature markets where it's been a decade or more where products have fought for shelf space. And the folks that are still standing are there because they have great products. And Dime absolutely has great products. If I could put it in a nutshell, Dime tends to describe their vapes as vapes for people that don't get high from vapes. So it's an intense experience. The hardware is proprietary, and so are the formulations. So those will launch, we think, in the fall in Ontario. This product call, we'll see products launch in September. So it should have an impact on our Q3. So again, big growth baked in the cake for the second half. And hopefully sooner than that, we'll see those products introduced into the rest of Canada. Jules, Ruby, and Slow Ride, these are some other brands that are a smaller part of our sales, but equally important. Both Ruby and Jules have been licensed. Slow Ride is strictly a distribution deal for those cookies. I won't spend too much time on these slides. I kind of went through all the brands, but here you can see some of the products that we've launched, some of the 1.0 products through Indiva. I guess technically Capsules is 2.0. So we'll see some iterations of those coming to market. Artisan Batch, of course, the craft cannabis brand that we developed in-house. We'll be launching pre-rolls shortly. Wana, we're actually up to 18 SKUs now. We're running out of room on the page here, but we've launched several more Wana Quick SKUs. Of course, we have the Wana Midnight Berry there on the far left. That continues to grow in sales, contains CBN. We're seeing a lot of CBN products come to market. So, I guess imitation is the most sincere form of flattery, but these products do help you sleep. So just be careful not to be holding the phone above your face if you've taken one to go lie down. These are Bang chocolates. Bang Milk was It was the top seller in Ontario, I think for the second quarter in 2021, and still a very strong seller. These are fantastic chocolates. I think the best on the market. Moving on, we've got some Slow Ride cookies, and then you see the Pearls at the bottom here, the gummies that come from Groon, as well as the candy coated chocolates called Pips. So what's different about Pearls? Number one, be a slightly lower price point, so more accessible. Number two, much more robust minor cannabinoid profiles. So whether it's CBN, CBG, or a 1-to-1-to-1 in the case of the Blackberry Lemonade that's got CBN, CBD, and THC, much more robust ratios, much more in line with what you see when you go south of the border. I think we're very quickly coming to a point where, another Me Too gummy with THC in it is not going to move the needle for the OCS or other provincial wholesalers or for retailers. The competition out there is very intense, not just amongst LPs, but amongst retail stores. And so having products that, let's say, have a little bit more added feature and benefit to them, this should help move the needle for the whole industry. Second last slide here. This shows some of the trade marketing. So this is some fact teas, which are basically acrylic gummies and chocolates. In many of our store visits, we would see Wana gummies on display, for instance, where the store had used actual gummies inside a sniff jar, which typically would be used for flour. Unfortunately, those gummies in the open air don't look good after 6 or 7 months, not as good as they do on day one, that's for sure. So we've armed stores with proper displays so that people could really get a good look at what the product looks like, before they open the package, which obviously you cannot do inside a store. And so that's it. We have research coverage from Raymond James. Their target 60 cents. And we just got a new initiation from Echelon. They had us on a watch list, but they picked up full coverage last week with a spec buy and a 50-cent target. So I'd encourage you to reach out to your brokers if you want to take a look at those reports. And I think, Neil, with that, maybe I'll turn it over to Q&A. So question number one here, can you comment on the stock performance compared to Indiva's overall performance over the last year? Good question. It's a fair question. Look, the stock has not performed very well. The whole industry has not performed well. And in fact, I've been through my share of bull and bear markets in my last 25 years in my career. I spent the first 15 plus years of my career in capital markets on the buy side and sell side, working as an officer and a director of public companies. This has been a pretty ugly bear market, but there's good reasons for it. The industry is not making money. Regulatory change has been slow, both north and south of the border. I mean, look, New York State is basically legalizing cannabis recreationally, and these stocks can't catch a bid. So I'm not sure there's any news that turns this around. What we're 100% focused on is the same thing we've been focused on all the time, which is producing and distributing great products, trying to grow profitably, and trying to get to earnings per share. We think we're on a path to get there before the year. Some of that will depend on not necessarily the regulatory change, but the successful launch of our new products. We're obviously very confident that those will go well. But if we were to get regulatory change, and specific to Indiva, that would be seeing an increase, for instance, in the edible limit from 10 milligrams to say 100 milligrams. That would double or triple our business overnight. And I just can't see our revenue going to somewhere between 80 and 100 million under that circumstance, and our market cap staying at 35. So look, it's been a tough journey trying to keep everybody motivated when the stock doesn't perform well. But fortunately, our products have done very well. And this may sound surprising, but I think for most of the people at Indiva, it's obviously everyone wants to see the stock go up. Everyone in the entire company has at least some stock options, and that's intentional. But getting that love back from our consumers, that keeps the fire burning. So stay tuned. Hopefully our results continue to go in the right direction. We certainly expect them to, and hopefully the stock will eventually follow. I'm going to take the second question in the chat box here because I'm right here, Neil, and then I'll switch over to the question box. So question is, when we were together 90 days ago, you had 2022 goals of 50 million of revenue, margins 40%, net earnings, market cap 100 by year end. Can provide an update on the guidance? Nope, no update. Still 50 million of revenue is the goal. I think 40%, again, that's our goal. Whether we get there or not, we'll just have to see when our automation does show up. We've got one piece of equipment that's stuck in China, which is on lockdown. The other piece is going through some delayed factory acceptance testing, but I think we'll at least hit those margins in the second half of the year, or certainly very close to. As far as net earnings, yeah, I think we're on track to do that, but it's probably Q4 if we get there. Market cap of 100 million, that's really up to you guys, not me. Okay, over to the question box here. Can you quantify what you expect vapes to contribute in the second half of 22? Everybody loves a David. 2023 and perhaps gross margins. So no, I'm not going to give you revenue guidance for the vapes for the simple fact that we haven't listed one SKU anywhere yet. So I think that's premature. What I would say is that Dime does about 50,000 units a year in Southern California, per month. And in Canada, the overall industry, we do about 1.5 million vapes per month. So what are we targeting? Look, I'd love to see us get to that 50,000 number. I think 100,000 would be even better. And if we got to that kind of range on a monthly basis, David, that would be between 1 and 2 million of incremental monthly net revenue. And we would expect this to be margin accretive. So the disposables are slightly lower margin, perhaps not surprisingly. The 510 thread carts are higher margin, but the mix of 510 thread to disposable in Canada is about 90% to 10%. So 90% of the unit sales are 510 thread carts. So we would expect those margins to be 40% plus. And I guess from there you can kind of extrapolate what we hope to add. 2023, I mean, that's, I'm not sure what I'm going to have for lunch tomorrow, so I won't hazard a guess as to what our vape sales will be in 2023. But, Dime is in California, also, Oklahoma and Arizona. They do about 100,000 units a month across those three states. So if we got to that kind of number, hopefully it would be closer to 2 million a month of net revenue for Indiva. That would be net of royalties. And, you can do the math on what that contribution would look like. Hopefully that's helpful. Next question here: any specific market segments you're looking to target through the remainder of 2022? Well, I think vapes are probably the most obvious category. I mean, we'll continue to introduce new products, both Indiva branded, as well as Garoon products, the pearls and the pips. So the edible products will continue to try and gain back market share by introducing new products there, and a lot of that is baked in the cake where we do have listings. But it's the vape category that I think is the big wild card. As I said, it looks like the earliest we would ship to Ontario would be late Q3. We would hope to ship to other provinces before that, and I guess we'll just see how popular they are. But we're confident that these products are well differentiated from everything else you see in the Canadian market. Next question: will we report Q1 and how robust are sales in Q2 so far? Too early to provide guidance on Q2, Rick. Thanks for the question. Q1, we're aiming for May 19th. Tentatively, we'll put out a press release in the coming days once we get that date locked down with our auditor. A couple more here. It's a rather long one here. From a creative and business perspective, and not regulatory, do we have any ideas as to how we can add even more value to Indiva as a company, or are we staying the course of licensing products and sticking to our current formula? Yeah, well, look, I mean, I think we talked about this in our press release and our conference call, and I touched on it a bit today, but one of the benefits of doing all of these licensing deals, as I said, it wasn't necessarily that we expected the brand recognition to be immediate in Canada for these brands. We're very happy with how Bang and Wana performed, being the top two edible brands in the country. But really what it's taught us to do is make gummies and chocolates and edibles at scale and distribute them across this country. The team that we have here are super talented, though. They know how to make food products. They come from General Mills, Nestle, McDonald's. So all very recognizable consumer names. So we are starting to make our own products. You'll just have to stay tuned for what those are. But I think that's the next leg for us, as opposed to just looking at other categories or relying on regulatory change, but bringing new products to market that delight our customers, that really are unique to the Canadian market and maybe don't exist yet. So stay tuned for those, Jonathan. Thanks for the question. Another question here about any discussions with Canopy Growth in regards to Wana lately. The short answer is yes, we do speak to Canopy, and I would expect those discussions to continue, but I don't have any update for today other than we continue to support the brand. And we'll just have to see how that goes. It'll be a process, so stay tuned. Next one: do we have a marketing plan in place to educate new retailers? My retailer's never heard of Indiva products. Oh, that's interesting, Henry. Thanks for the question. I'd love to hear what your story is and where you are, and we'd be happy to send somebody out there. We employ a sales agency and we blanket the country, so it's tough to see every single store on a regular basis, given that we're up to 3,000 stores. I mean, thinking about it, there's 250 work days a year. If you visited 12 stores a day, you'd only see each store once a year. So, please forgive us if we haven't come by. Please send me your details and we'll have somebody go out there. Well, we work with our sales agents and we work with our key account managers. We regularly host product knowledge meetings in stores and product knowledge days. And something that we'll focus on in the second half of the year, now that the regs permit, is using uninfused samples to help people test the quality of the products in store and outside the store. So stay tuned for that. Next question, what is the anticipated price point for the dime pens? I'm not going to be specific for competitive reasons, but it would be at the high end. This is a premium product, so expect it to be priced where the other premium products in that category would be priced. And I don't know if I'm answering questions faster than they come in, Neil, but I think we're getting close to the end of the list here. Happy to stand by, though, if folks have more questions and want to type them in.
Yeah, that was the last one. And, you know, maybe touch on, you know, you attending the consumer lift, the consumer conferences as well.
Sure. Yeah. I mean, look, the good news from a stock perspective is we're starting to get more attention from more brokers. Obviously, Echelon initiating last week was nice. I will be speaking at the Canaccord Cannabis Conference next Wednesday. That's a first. So great to see our hard work paying off, getting recognition and being invited to speak at these conferences. I'll also be kicking off the Lift conference in Toronto, speaking at 9 a.m. Thursday. And then I believe I'm on another panel, and apologies, I can't remember if it's Friday or Saturday, speaking with some of the other larger LPs about operating in the Canadian space. So if anything, I think our voice is getting louder in the industry. We're getting a little bit more recognition for hanging around and continuing to lead certain categories, continuing to grow our business. Yeah, those are the next events. As I said, Benzinga was a terrific conference. It was great to be out unmasked and speaking with people face to face again. I think I had around 25 or 26 one-on-one meetings, scheduled one-on-one meetings over the course of 2 days. And then, of course, the networking is terrific too. So we're out there. We're trying to make as much noise as we can about Indiva for our shareholders. And at the same time, you know, we're not slowing down on corporate development. You know, I think we've got enough products on that title page, and let's say brand extensions or product line extensions from the core products you see on that page to more than double our revenue going forward. So, and that's just not from last year to, you know, from 35 to 50 million, which is not a doubling, but with regulatory change, I think we can be north of 100 million. You know, there's no reason why the edible category can't have a big run. There's no reason why dime vapes won't be successful in Canada, or the Pearls gummies or the Pips chocolates, or any of the other innovative products we have coming to market. So we've got a lot of growth ahead of us still here. This is it's still very early. I know it feels like it's been a long slog for the cannabis sector because people have been watching it for 7 or 8 years. And, you know, most of the stocks have done full round trips, if not gone down, below hitting all-time lows, for instance. But, in the grand scheme of things, edibles have only been legal in this country for a little over 2 years. The whole cannabis industry has only been legal recreationally for about 3 years. We've still, by some estimates, 40% plus of the entire market is still in the illicit category for a variety of reasons. So still lots of industry growth left ahead. The overall industry will double or triple from here still in the next 3 to 5 years. And the categories that we participate in, we think can grow even faster given data from mature markets. So stay tuned. Lots of growth left ahead.
Yeah, we got one question just popped up there, Neil.
Oh, yeah, sure. What is the potency level you believe is needed to satisfy consumers competing with the illicit, legal market? Good question. Thanks, Stephen. I think 100 milligrams would do it. I think there's plenty of evidence. Colorado, the limit's 100. California, it's 100. I know some other markets, Oregon just went from 50 to 100. I heard today, I actually didn't know this, but I heard Oklahoma has no limit. That's surprising. I think Michigan is at 200 milligrams. I think 100 would do it. And so it's not just mature markets. I think the other data point is that if you look at a recent study that was put out by the OCS and the National Research Council, they tested 22 legal edible products and 22 illegal edible products. And what they found was 86% of the illegal product contained multiple pesticides, which is just downright disgusting, let alone unsafe. And further, when they looked at the potency, it wasn't even close. So some edibles advertise having upwards of 500 milligrams in it. It was pretty rare that any of these, some of them are advertised at 100 or 200 milligrams, didn't have anything. So, you wonder why people try an edible and get no reaction and think that edibles don't work. Well, they certainly don't work if there's no THC in it. I think the vast majority of those edibles, though, the potency, I would say, was somewhere between 50 and 100 milligrams for let's say the higher numbers, or 50, maybe 50 to 150. So that report is publicly available. I would encourage you to take a look. I don't think we need 500 milligrams to shift people over. I think 100 would do it. And this is an important point to talk about, which is the distillate is now essentially the cheapest component of the edible. It's gone from 40 or 50,000 a kilo to about $2,000 a kilo. And just to put that in product terms, 1 milligram of THC distillate might be a quarter of a penny. And so if we were to add 90 milligrams to our pack to go from 10 to 100 milligrams, it might only cost us an extra 25 cents. So that's not the difference that makes a difference. If we're forced to add more gummies to the pack, there'd be a further cost increase. But we'll be able to charge $20 or $25 retail for that product. So the price won't go up tenfold, but the cost will barely budge. And so it actually means we'll see significant margin improvement in addition to adding, hundreds of millions of incremental retail revenue across the whole industry. It really is a change that ought to happen sooner than later. I'm seeing some questions pop up in the chat here, Neil. So I'm gonna switch over. Oh, it's just some comments, not questions. So,
yeah, maybe just touch on obviously you've been the edible market has been in sales during the pandemic. What do you expect as we get out? Hopefully we're out of this pandemic. How the store increases and obviously sales increases as we go into the summer here.
Yeah, look, I would expect it to outpace the overall market growth, right? We've gone from 1 or 2 or 3% to 5 to 6% in the last year to 18 months while being in a pandemic. I don't think we saw a major boost to our business because of the pandemic. It's tough to say whether it was a real drag. It certainly didn't help when stores were closed and people couldn't go in and get educated. Obviously, regulatory change is going to have a much bigger impact than coming out of the pandemic. But look, I think it's a net positive. Whether it's a sporting event or a concert or just being out and about in the world more freely, I think you're going to see, whether it's being at restaurants, etc. I think you're going to see more use occasions, and hopefully that will drive sales, above the 5.5% industry total that we see here. Should be positive, Neil. This is a question specifically about Tokyo Smoke. Yeah, look, we're fans of Tokyo Smoke. Yeah, I absolutely think they'll continue to contribute building the overall market. We've got a lot of installations inside Tokyo Smoke stores. In fact, the images that you saw on, I think, page 15 of the deck are from Tokyo Smoke stores, including one on Yonge Street. So, yeah, we're big fans. I think they've done a great job of branding, and I think the brand had a great start. It's got a great home, and I think it's going to be around for a long, long time. Neil, I'm just thinking maybe it's worth just spending 1 minute on automation here because it's something we touched upon, but there's been some delays. There's 3 major components that we're automating. Well, really 2 major ones, but in different ways. The first one is packaging. So we've had some customized robotic equipment built that will help with the packaging of our Bang chocolates and Wanna gummies. This is not going to result in necessarily in layoffs. We're obviously growing. We're adding dime vapes. We've added pearls and pips. We've got plenty of work. And frankly, it's no different for Indiva than any other company that has experienced labor shortages as a result of the pandemic and I guess what they were calling the Great Resignation. We're starting to see that show up in Amazon's numbers, which is a bit scary. Hopefully it doesn't show up in our industry's numbers, but the automation itself was an investment of close to $1 million. We've seen no benefit from it yet because it's not installed. But we think this will save us over $100,000 a month. And if you look at our net revenue from last year, that could add 300 basis points to our annual gross margin. And basically, this will remove 2/3 of the complaints that we get, which compared to the total number of units we move are infinitesimally small. to get a couple hundred complaints a year about a package that wasn't sealed right, or only having one gummy in the pack instead of two. We never get a complaint about three gummies in a pack, but that will be almost, I would say 100% eliminated with the use of robotics. The other area we're automating now is also the production of gummies. So we use a lot of pots and pans is probably the best way to describe it. And we make gummies exactly the way Wana makes them in Colorado. But as they're moving towards automation, so are we, and that automation will apply to all the gummies that we make. And so again, we would expect to, we're not quantifying those savings yet, but we would expect to see good savings there. And then we've got some, let's say, tertiary automation coming on with respect to packaging, not so much Bang and Wana, but the multi-count stuff. So, basically simple counter technology that'll help us do 5 and 10 packs more efficiently, whether that's jewels or Wana gummies or pips or pearls. We've got a lot of products that are moving away from just the 1 or 2 in a pack. And so that'll help a lot as well. And, there's a variety of reasons why there's been some delays, but we're confident that, all of that equipment, well, I shouldn't say all, at least the packaging equipment should be on site and operational by the end of Q2. So we should have a, good amount of benefit in Q3 and Q4. And then unfortunately, the gummy production equipment is stuck in China, which, as most of you know, is on lockdown now. And so that might be further delayed, hopefully not too much longer, but we're in a position to still fulfill all the initial orders that will come in from Ontario in July. If there's any delay, it might slow down a little bit our rollout to the rest of the country. But anyway, the path is there, and hopefully all that equipment will be in sooner than later, and we'll start to see some real margin benefit. Okay, so last question here. Thanks for the question, Rick. When will the government respond to LPs in terms of regulatory change to potency? It's a good question. I mean, the Cannabis Act was slated to be under review already this year, so I would say it's overdue for that review to begin. As I said, in late May, there'll be a pretty heavy push by a team of LPs and the Cannabis Council of Canada in Ottawa on Parliament Hill, basically with our biggest concerns, and the edible potency is right at the top of that list. So it doesn't require necessarily a full Cannabis Act review. I would point to the recent change in cannabis equivalency as it relates to beverages. Some of you may know that each pack of edibles and each beverage comes with it a weight equivalency in grams of cannabis. That weight equivalency was woefully high for beverages, and as a result, consumers couldn't buy more than 5 drinks at a time. And so that rule got changed ad hoc without a full review of the Cannabis Act. So you just never know. It could be sooner, but my expectation is probably within the next 12 to 18 months, we'll see some movement on edibles potency. It's irresponsible, in my opinion, not to increase the potency. It's driving people back to the illicit market. This is where all the problems happen. Poisonings that have occurred. If it was occurring from the legal market, I would have heard about it. I would have heard about it personally. And I can tell you that we've sold 16 million packs. We sell a pack of edibles every 2 seconds in this country. And we've never had one complaint from a parent saying my child ate one of a Wana gummy or a Bang chocolate and had to go to the hospital. So we know where the problem lies, and we know how to fix it. We just need to offer a safe legal alternative. So we'll push as hard as we can to get that. Thanks, everybody.